Changing mortgage rates affect both buyers and sellers. And I've been asked quite a bit recently about how it affects each. And so, as an educator in the real estate industry, I'm all about empowering my clients with knowledge. And we seem to concentrate mostly on how rising interest rates impact buyers, and understandably so. But it's important for both buyers and sellers to be aware of the impact of changing interest rates on our real estate market and to hopefully adapt their strategies accordingly. So, I wanted to give a little bit of insight as to how those rates affect us. So, even if you're on the fence about whether to buy or not, or whether to sell your home or not, understanding how even a small shift in mortgage rates can affect both your purchasing and selling power is important. You know, Mortgage rates, as you know, have been all over the place this year, bouncing on average, between 6 and 7%. But what does that mean for your monthly mortgage payment? So let's talk about how even a small shift in mortgage rates, maybe just as like just 1% or even 0.5%, can impact your purchasing power. Don't let changing interest rates catch you off guard, because the chart that I'm going to show you breaks down how fluctuations in mortgage rates can impact your monthly mortgage payment and your overall purchasing power. So, if you take a look at the chart, you can see the difference that even a percentage, 0.5% will make. And it's not just home buyers who are affected by changing interest rates, but also home sellers. Changing interest rates can affect not only the purchasing power of buyers, but also, interestingly enough, the selling strategy of home sellers. So let me give you an example. Let's consider a home seller who is looking to sell their property for, let's say, 600,000. If interest rates are low, less than 6%, even less than 5%, potential buyers may be willing to pay a higher price for the property because their monthly mortgage payments would be more affordable. But if interest rates rise by even a percentage point or more, the monthly mortgage payments for buyers would increase, obviously, and potentially reducing their purchasing power. And therefore, as a result, the seller may need to adjust their selling price to attract buyers in order to sell their property in a competitive market. So, changing interest rates can impact both the purchasing power of buyers, but also of the selling strategy of home sellers. So, when interest rates are low, buyers can afford more expensive homes, which may result in higher selling prices for sellers. But when interest rates rise, buyers' purchasing power decreases, and sellers may need to adjust their pricing strategy in order to attract buyers and close a successful sale.